Thank you again for taking the time out of your busy morning to join us today for the second part of the Strategic Value Master series. My name is Jane Georgelis. I'm with the Texas State University Small Business Development Center. If you have not, if you are not aware of the SBDC, we offer support to startups, established business through the form of business advising. Our service is at no cost due to the tax dollar that has been paid. If you are interested in utilizing the service of the SBDC, you can locate your local SBDC using the QR code on the screen or access website americassbdc.org. And a quick shout out to some upcoming events that we have here at Texas State University SBDC. We will have the second part of the Playbook series called Unleashing Your Superhero Potential on January 22nd at 10 a.m. and that will be online. We'll also have a workshop on credit and financing for businesses on January 28th at 10 a.m. also on Zoom. Details of both workshop and will be on our website. You can access our website using the QR code on the screen. And a quick reminder that this is a listen-only webinar. You will be muted and your video is turned off. So please utilize the chat box and the Q&A option to send us your question so they can be addressed. And I will be sending out a follow-up email with the link to the recording and any handouts that our speaker would like to share for you today. And with that being said, I will pass it over to our moderator, Jana Minifie, and we can get this started.
Good morning, everybody. Welcome to our monthly panel discussion that we're having today. We're discussing critical challenges that many entrepreneurs face, the importance of understanding your business health. Our panel of experts bring diverse perspectives on entrepreneurship, business development, and hands-on startup experience. I'm Jana Minifie, and I'm a certified business valuation analyst, and I assist businesses with preparing their business to get a high value exit. And I'd like to introduce our wonderful panel here today. I am so excited that we have this esteemed panel here with us today. So let me start with Bill Thompson, who is our birthday boy today. Happy birthday. Thanks. Happy birthday, Bill. He's 50 today. Oh. Yeah. Well, he has to be 50 because I'm 29. He's the Associate Director of the Texas State Small Business Development Center. He has extensive experience in being an entrepreneur himself and has assisted hundreds of small businesses, small being any business less than 500 employees. We have over here Alex Gonzalez, which I cannot tell you how excited I am about having all of you here today. I mean, this is really a great panel. You guys don't understand how great this is. He's with Texas Partners Bank. He's a relationship banker who specializes in helping business clients take their companies to the next level through deposit services and lending for real estate, M&A, and working capital across multiple industries. And then we have my dear friend, Anne. Anne is a family wealth counseling and helping people in planning model with a value builder source, which I really want to hear more about today. It meets you where you are, contemplating your next big milestone. They provide leadership, coaching, and thought-provoking questions at your planning table. Together, they identify the unique elements of your wisdom and talent, the core values that underlie everything you've achieved so far. These core values transform your intangible gifts into a tangible launch pad. However, they're also just the starting point. While values define who you are in the world, culture is about how you apply those values and the lasting impact they create. And George is another person I just think is wonderful. He and I were in a group together, and he had to change to a different group. But we had both started that group at the same time. And just for that reason, I always feel like we're like the best buddies. I know. He is with Now CFO. It is a roll up your sleeves, full service outsourcing CFO, operational accounting, and financial consulting firm with a singular focus on your company's success. So we have a great panel here today. And I've already provided them with most of the questions I'm going to be asking today. And I'm going to, I know I gave you this long list of questions, but I want to start with one that's not on this list. What is the one question that you wish your customers or clients would ask you? And
Yeah.
Alex,
For me, it would be, as an owner, when I do lending, I want them to know their responsibility as an owner. What's their financial responsibility for the company? Do they understand the financials? Do they understand what's in those numbers? So that to me is important, and especially in the case of something, if something goes south, they need to understand their current financial responsibility for the business.
I would jump in and basically say, we're talking about financial health, and basically financial health is related to business value. And so the question I would like everyone to ask basically is, what's my baby worth? Because your business is actually your baby, and you want to know how healthy is your baby? Is it well fed? Or do I need to nourish it with additional sources of nutrients? And that's what
I love that.
what we do.
I love that answer. That's a great answer.
Thank you.
I like how you talked about that because it is as a baby, and you're trying to think about what else can we do for this baby to make it better. Oh, great, George.
You really threw me a curveball here, Jan. I didn't expect this one. And so the best I can do is, I wish they would ask me, will you join me at Leroy and Lewis barbecue so we can talk about my business? I wish they would ask me that question. It's a great barbecue restaurant. Shout out to Leroy and Lewis. But because I do a lot of listening. So I just want to hear them tell me about their business and what are the challenges they face and what keeps them up at night. So, and what better place to do it than Leroy and Lewis?
Awesome.
I think we'll have to go there after this. Bill.
I guess how you manage cash flow, turning inventory, collecting accounts receivables, what's a reasonable time to pay your accounts payables to make sure, cash, you're not out of cash, you have a heart attack. You're not out of profit, you got a cancer. And so cash flow will kill you really quickly. And that'd be the first thing. That's one thing I like them to ask me.
Well, and you're going to be addressing that pretty soon, aren't you?
Am I?
Yes, you are. I think you're doing something called profit mastery.
Oh, yes. Yeah, I do profit.
Which is coming up.
Yeah. In February.
Yes, in February. The only reason I know that is because I'm doing it with him. It's a shameless plug for our profit mastery. So if you really want to learn more about finances and how to do it, and I got to tell you about profit mastery. I mean, I have bought into that. It's such an easy way to understand how to do financials. I mean, I have an accounting background, finance background, but when I took profit mastery the first time with this guy, we were so competitive. I'm trying to get the answer first, but it explained it in such a way that it was so easy. I mean, I already knew it, but the way it explained it was just amazing. Okay, so now let's go to the questions that I've already shared with you. What are the essential financial metrics every business owner should track? What do you think, guys?
Well, I'm going to jump from a slightly different angle. There's a statistic that showed that for business owner, the business is 80% of their wealth. So we can look at financial metrics, but if we don't know what is the value associated with it, it will be difficult to see if we're making progress, or is our asset increasing, or is it just, treading water? So one of the metrics that you want to look at if you have a dashboard is the 8 key metrics that allows you to say, am I building up this asset besides the EBITDA and the cash flow and the recurring? So how do I get to a dashboard that shows me the overall health of the business and if I'm accruing value? That's one of the things that I would say.
So when you talk about a dashboard, some people may not understand what that concept is. Is that something that you can get from a software package? Is something that you design your own? Which kind of dashboard would you recommend?
There's a lot of ways. There's a lot of ways to do that. I mean, I think most small businesses are typically putting together an Excel spreadsheet that includes just a quick snapshot of the key metrics in their business that determine whether or not they're healthy, whether that's just revenue, gross profit, net income. I would also add a few of Bill talked about cash flow, so important. What's your days payable outstanding? What's your days sales outstanding? You know, the key to cash flow is to collect it fast and pay it slow. So knowing those metrics, and then the other thing in operational on dashboards are your operational KPIs, which may be non-financial in nature, but they kind of serve as the levers that you can push and pull and dial in order to be able to improve your financial performance.
Exactly. Yeah. Kind of what one is, as businesses grow, if they're not careful, they will lose their equity position.
Exactly.
Whether increasing debt or
Yeah.
increasing,
Mhm.
bringing on investors. So it's important to watch that equity. I mean, you want to watch all your metrics. The equity as you're growing, you want to make sure you're maintaining your equity position, that you're not losing equity.
Right, right. And we actually find that periodic review of where your equity position is or what your value is important. So we actually develop a system, it's called the Value Builder System, that looks at the 8 key metrics, you know, besides the EBITDA, the profit, and so on, but also looking at things like recurring revenue, how concentrated is your client base, how concentrate, you know, there are 8 different key metrics, and it's through a simple assessment, like 13 minutes. I shouldn't say simple, easy and quick, but not simple from outside, because we need to churn it. And those values usually give the business owners a compare against a database of 50,000 other businesses, where the value is in comparison to other businesses in their niche. It's very valuable because then you can take it several times during the year and you can measure your progress and you can work on metrics that need improvement that will help your value.
Alex, when you're talking with people that are coming in to get loans and things of that sort, are there any metrics that they're not looking at that you feel that they should be looking at?
Well, a lot of times they come in talking about revenue. If I'm doing X amount of revenue, it's like, well, what's your profitability? What are your margins? I mean, do you know your margins on each product, especially if you're manufacturing? You need to understand that. And you know, what's still in your inventory. A lot of times I get inventory reports and it's like, we need to really assess this. What's really in inventory? What's really has value? So a lot of times it'll just be overstated and you can't value that.
Exactly.
And so we look at that. We look at, you know, turnover ratios. We look at all that because especially on ARs, if they're not bringing in their ARs, that's money they're leaving on the table. They're basically financing that for their vendors or their clients.
I think another thing, Jan and Ann mentioned it, is having those metrics is really important, but having something to compare those metrics
Exactly.
against,
Industry
you know,
benchmarks.
industry standards, et cetera. So you know where you stand relative to your peers.
Mhm. Exactly. And that, and you compare yourself against a peer, but you also compare it against yourself to see if you're
Right.
making progress. Because if it's not measured, it's not managed.
Right.
So that is key.
Important. Yes.
The other thing when you do, like when you go into a transition on M&A sales is like, what's driving your sales? Who's driving your sales?
Mhm.
And if those employees leave, what does it do to the business?
Yes.
Owners don't think about that as much.
Or if you just have one major customer. and that customer
Yeah,
goes away.
exactly.
Yeah.
Exactly. If I can jump in and just say for business owners, 2 other metrics that I thought are important is how involved is the owner in the sales or the business development of the business? Because if the owner is the only source of sales and you can measure it from that, then that's not a business. It's just a very good job for that owner.
Right.
So these metrics that we talk about allow us to move it to that angle. The other one is cash flow. Because if you don't manage the cash flow, you could have a very profitable year without the cash flow to pay yourself the profit.
Mhm.
So those are key things that, you know, you immediate profit, but also long-term value.
Yeah, and that's one thing I look at as a business evaluator is I'm looking at who are the key employees.
Right.
If that key employee is the owner and the owner is doing all the hats, you don't
Mhm.
have a business to sell.
Exactly.
It's a job. You're selling a job to somebody. And if somebody really want to invest in a job,
Mhm.
probably not.
Mhm.
One of the hardest things for us when a business owner first starts, they're doing everything and getting them to let go of stuff and bringing in systems, creating the systems
Exactly.
so that they can manage the systems instead of them trying to do everything.
Mhm.
You've got the business owners been doing, still checking the mail. You know, it's like, you know, you create system.
Yeah.
They might be taking
Checking
out,
the mail.
they might be taking out the trash too.
Yeah.
And Bill, you mentioned owners of equity earlier. Now, careful with distributions too. Because I
Yes.
see that where the business is doing really well, very strong, but the owner is taking everything out of it.
Right,
And ends up, you know, on a M&A transaction, that really hurts them
right.
on the sell side.
Well, also, if they are taking everything else, and they're not building a working capital, then they're really depending on the bank for the working capital, and that can go south. So it's important to build your working capital.
So we have two questions right now in the Q&A. And about the 8 key metrics, we're going to provide that information to everybody, right?
Yes, we will. We
Yes.
will. But if I can just chime in, because I see a question about what's an example, and I think that's key. An example of a metric is how much of your revenue is recurring as opposed to a one. Because what happens is if the business revenue is constantly having to be starting from zero each calendar year, you don't have a business and the value is not as much. So one of the metrics is how much of the revenue is recurring. Is an automatic renewal of the business is key. That differentiates between a glorified job and a sellable business.
How would you recommend, how do you recommend procurement process to consider master planning? I'm not,
I'm not sure
Understand
how
the
that.
question?
Yeah.
I don't understand the question.
okay, good. I'm sure it wasn't just me. Okay,
No.
good. All right. So I'm not really sure. So,
All right,
Jorge, could you,
write it down.
yeah, put a different question or explain that a little bit better? Because we'd love to answer your question. I mean, we've got the people here to do it today.
In the meantime, we were talking about risk, right? We were talking about the risk of being too dependent on a single customer, being too dependent on an entrepreneur founder for the generation of the business, and you've got a great job, but you don't have a business. You can also have risk related to your suppliers. If you're
Yes.
too dependent on a single supplier,
Yes,
if you're not in control of that supplier, if something disrupts that supplier, then you may be in trouble
put 'em
too.
out of
So
business.
diversification is a really good thing, not only from a customer standpoint, but from a supplier standpoint, and building out your team internally.
And looking at all the different areas of risk, because there's all different types
Yeah.
of area for risk, from government regulations to the economy. There's so many risks you don't have control over that, you know, how you're going to mitigate those risks, how you're going to reduce it, are you going to live with it? Are you going to insure against it?
Exactly.
What are some free or low cost resources that are available to help business owners better manage their financials?
I have no idea.
Okay.
SBDC.
Because this is being recorded. I
Yeah.
can't reach it.
Okay. Well, you have to give a plug for the SBDC. SBDCs around the country, we came into law. I don't know what Jane said in the introduction, so I may be repeating those. We came into law in 1880s under Carter's administration. And basically to help business owners who are getting SBA loans to better manage that money. And so we're across the United States, and also in Central and South America. And I believe there's a gentleman in Kenya that's starting an SBDC that we offer free. We don't call it free. We ask for you to fill out. We survey you to death. We don't charge you. We just survey you to death. But we do financial analysis, as does SCORE.
Score, yeah.
Yeah, Score. And also EGBI is another one
Yes.
that does really good work. And I don't know if Big Austin's still here or not. They were here for a long time.
Oh, yeah, they were. I don't know
I haven't
either.
heard from me.
And I think the city of Austin also has
They do,
a small business
they
area.
do, yeah.
So look at your different cities, because since we have people from across the United States here today, there are SBDCs, they're associated with a university in your area, and they would also have resources there as well.
Jana, can I mention a free resource
Yeah.
that we
Sure.
offer? I talk about the value builder system and the 8 key metrics. So there's an assessment that we make available free to business owners. It's a 13-minute assessment. And when you answer that, we will be able to give you what's called a value builder score. And the value of that score is that we track that over a number of years and against the actual sale value of about 50,000 businesses. So that score, you can see it comparing to the industry mark, but also it identify the areas, like I said, again, that you can improve. It's a free resource. You can do it, before and after you take actions. So that can be very helpful and free for everyone.
So at the end of all this, everybody that's here today will be sharing this with everybody. Everybody's contact information. So if you want to take advantage of what Ann is talking about, you can do that.
Can I elaborate on that? Because there's no way that one agency, there's no way the SBDC can cover everything that a business needs.
Exactly.
And so our director, Joe Harper, not all SBDCs are this way, but our director is really big on collaboration.
Exactly.
That if I can because one thing we have to do, even though we do free services, we have to teach the entrepreneur that pay to play.
Right.
To really be in the ball game, you've got to pay to play. You've got to have an attorney, CPA, and an insurance agent.
Exactly.
And so, yes, and we can refer to you and that by support, because there's no way we can meet everybody's needs.
You make a good point, and we want to make that service available through the SCBD so that you can offer it. But one of the key things that is important is we find that people who have improved their value builder score actually double the value of the business by seeing what offer they're getting and the number of offers that they receive.
Yeah.
So we can definitely share that.
You bet.
Awesome. All right. So we have, let me find where is.
You'll see it in
Procurement
Andrew.
of contracts.
Yeah, he mentioned that procurement is procurement.
The government contracts, contractors.
So if you're trying to procure contracts from the federal government or the state, in that case, we're talking about requests for proposals. And if you're trying to get those, there are different places where they post those that are available for anybody to look at. And
Central Master Builder List or
Central Master Builder List.
something, I can't remember.
Yeah, something of that sort. But you can go and see what the requirements are. And if you're doing that, please talk with an expert before you submit your bid, because it's something that we see many times is that small businesses, they will try to underbid just to get their foot in the door. Well, they don't pay those contracts until it's over. So you've got to have the cash flow available to provide that service or product to that government agency. And then you'll get paid much later. So that cash flow cycle is very long. And you've got to make sure that you have cash up front to do it.
And it tends to cut your margins.
Yes.
On that thing, UTSA down in San Antonio, University of Texas, San Antonio, at the SBDC there, they have the Apex program, and I can't remember what Apex stands for, but it's for procurement. And they teach people how to become historically underutilized business certification, do the minority or women certifications, and they will help guide you through that process. So that's UTSA down in San Antonio.
And we'll get that link and send it out to everybody afterwards so that you can get that information. But do talk with somebody about before you do any of that. Because we've seen too many businesses go bankrupt because they don't have that. So I got a question about banking. What are the financial red flags that make banks hesitate to lend?
I think is not enough liquidity in a business. That's one that I keep seeing because they're running everything so lean that if something were to happen, they have nothing else to fall back on, or no working capital lines of credit to support it. You know, also the volatility in the financials. They're up, they're down, they're up or down, no consistency. So what's causing that? And also a rapid increase or rapid decrease. We have to mitigate that. We have to explain it completely. Because I've had some of those. As long as we can mitigate it and go through the process and explain why, we're okay with it. But you know, if you go from a $6 million revenue to 12 million, what happened? You know, was it an anomaly, or can it be explained?
And also, one thing I like to point out about that is that when you do grow that fast, you have the efficiencies to
Yes.
handle it. Because if you have to be more efficient and effective at your business as you
Yeah.
grow that fast. And you probably work with that too as a CFO, right?
Well, one of the things that Alex mentioned was volatility in the business. And many businesses are accounting for their transactions on a cash basis. What came into the checkbook and what's going out of the checkbook. And that doesn't necessarily reflect the financial performance of the company. So what we often do is work with companies to get their financial statements reported under GAAP, which is generally accepted accounting principles. So you're recognizing revenue as it's earned and you're recognizing expenses as they're incurred. For example, if you pay a year's worth of insurance on March 1st, well, you're going to have a huge expense in March, and your profitability in March very well could look like it's not very good, right? But the reality is you've got that expense to spread over 12 months, and GAAP would have you capitalize some of that and recognize it over 12 months. And so I think, Alex, most of your clients, you require generally a GAAP
Yeah,
financial
GAAP
statements as opposed to cash
And
basis.
accrual is a
financial
much
statements.
better, you know, format to follow rather than
Accrual
cash
basis, yeah, same.
I just want to mention something about what Alex said, you know, when looking at how thin margin the business is and the profitability, is mitigating some of that risk could be having things like business interruption insurance or a succession plan in place. So again, those are things that could set the business up for more financing options if they really think through and prepare that. And again, that's back to that dashboard we keep talking about that we review.
Yeah, and then like you said, on succession planning, do they have, because if you have one owner, what happens if something happens to that owner? They get
Exactly.
incapacitated, they're in the hospital, or they die.
Right.
You know, can the spouse or whoever the partners are assume the business? Can they run it? Is there enough resources to make that work? There are some industries where, especially when in healthcare, what I deal with, where the spouse cannot own it unless they're licensed in that realm,
Exactly.
in that industry.
Right.
So you got to be very careful because they lose value right away.
Right.
And, you know, to relate to that, I saw a question about, you know, how many people on this panel has gone through that kind of business acquisition or transfer. You know, I sold 2 businesses and merged. So knowing that valuation at any time, being ready for that. And that's a way that you check your business health, because if it's not being able to continue, no matter what happens to you, the bank will step in. You know, naturally you should, or the business will be interrupted. So that's something that to keep an eye on.
Yeah. And not only, you know, coverage for like us, the lending institution, whether life insurance or business interruption insurance, but also for your heirs.
Yes.
You want to make sure you have enough there to cover, because I've run into situations where there's not enough. The bank is covered, but they're not.
Right.
And that's really important in a, you know, not in a non-liquid situation. How do they live? How do they, you know, that's part of the planning process.
Exactly.
You plan for the worst and expect the best.
There's a question up here about grant writing, because I know a lot of small businesses hear about different types of grants that are out there, that basically equity-free money, right? And there are grants out there for different types of businesses. Where would you suggest where they go get help in writing grants?
Well,
We come to the SBDC?
well, one thing, if they come to the SBC, we deal with USDA a lot, United States Department of Agriculture. And the regional guy goes, we don't do grants. And because people think the USDA do grants, they will do some grants. They'll do a value add grant. If you've got a product that you want to bring to market and you can prove this marketability, they'll do a value add grant. Basically, most business, there's not, Paul Wright, I used to tease, there's nobody sitting on $1 million just ready to write you a check for $1 million for your hamburger stand. If you've got the next cure of Alzheimer's or something like that, there's probably grants out there.
It depends. I mean,
it does.
right. So I write a lot of grants. I've gotten a lot of grants. So I kind of said.
So you set me up. Thank you. We know each other. We work together.
Yeah. Well, Bill and I had this discussion, I don't know how many times, about grants. There are grants out there for very specific things. Yes, there's grants out there for STEM, but they have to be mostly coming out of the universities, is what they're looking for. They're looking for research and how to commercialize that research. And the grants out there, yes, you can probably get up to $2.5 million if you do a phase 1 and phase 2 grant, an SBIR or an STTR grant. And they're given out by 8 different agencies. So they're called SBIR and STTR. And to get those, you have to really understand your target market. You have to understand that business model canvas. You have to really have done your research. You have to go out and actually talk to people about what their problem is in that area.
Mhm.
And you have to document that. You cannot write a grant sitting at your table and saying, everybody wants my product. Everybody wants to buy this. This is going to help everybody. And you don't have any facts to back it up. And that's what they're looking for in grants. They're looking for the facts that they're in there. Did you do your homework, or have you just sat in your cubicle and wrote this up in like a story? Because I'm also a reviewer for grants. And that's one of the things I'm always looking for. Have you actually gone out and talked to 100 people and asked them, what is the greatest problem you have in this area? Or did you go out and try to sell it to them? If you went out and tried to sell it to them, they're going to tell you what you want to hear. So when you go out and you talk with people about your idea, you ask them, what is your greatest problem in this area? And then they ask them, how are you currently solving that problem?
Mhm.
And if they already have a solution, why would they want your solution? And if they're not paying very much for that solution and they're happy with that, they're not going to pay you any more money than what they're actually paying right now. But if they don't have an adequate solution, then you have a market, but you have to prove that.
Mhm.
And that's what grant writing is about. So yes, there is help, but you got to do your homework.
You just reminded me, I was at a seminar probably about a month and a half ago of the United States Department of Defense, and the Army was there, the Marine Corps, Homeland Security, USDA was there, Department of Education. These guys, they do farm out for grants for specific things, what they need, but they'll only fund like at the most 20% of a phase 1 grant. You have SBIR at phase 1, phase 2, and phase 3.
Exactly.
And so a lot of times you'll get phase 1, but they may not pick up phase 2 or phase 3. So it's really, like Jana says, you really got to know what you're doing when you're going out for grants.
Jana, if I can share an example of that. I have a client who's in the biomedical packaging business. And so their target is very specific. They produce containers for these, different trial medicine. And so they were able to get a grant that allowed them to research what are the barriers for getting the packaging. And then they have interviewed all the different research centers. So it became a very, very involved but precise project and a lucrative market once they got through it.
Yes, so there are those examples. And there's one up here about agriculture. If you're looking for agricultural grants, I really encourage you to reach out to Texas State's Agricultural Department. Their faculty at Texas State in the agricultural department, they do write a lot of grants. And they also have a program. Ken Mix runs a program. Do you remember the name of it?
I do not, I haven't talked to Ken in a while.
Yes, but it's a small producers conference that he does I think it's in August. So Ken Mix. I will get that information and I will make sure I send that out as well.
There's also the Texas Organic Nursery and Gardening Conference coming up that is specifically for that. And we're participating with the Texas Agro Life on February 3rd. I'm doing a speech, but it's for agriculture. It's the Texas A&M, at Prairie View A&M, excuse me. That's on February 3rd.
Yeah, and there's a variety of different grants. I know I have clients in the restaurant industry and they've applied for multiple grants, especially as part of the CARES Act. That was part of it. So they were able to benefit through COVID and all of that because of those grants. And keep people employed.
Yes, but when you're writing those grants, it's so important to be very clear and concise in what you're doing and base it on facts.
You can talk about Accor?
I could talk about ICOR. Yes, we do have a program that I offer. It's called ICOR, CORPS. And you can find it on the Texas State website. And with that program, we teach you how to go out and interview people and do that process. And we do take anybody from the community. The whole program is on Zoom. We have 3 cohorts coming up. We have one in February, March, one in March, and one in April, May. But they're all on the website. But I will send a link on that too. But it's a free program, and we help you learn how to do product market fit, and how to actually start that process and how to expand it to carry throughout the whole business model canvas. But I will give that information out. But it's a free program, and we do include community members for free. We're the only ICOR program across the United States that opening up to non-university participants. So, and it's something that we do at Texas State.
Awesome.
I know. I do way too much. I need to quit doing so much. Let me go back to my questions. All right. This is a good question. Maybe. How do lending requirements align with or differ from valuation metrics?
Well, lending requirements, I mean, the company has to be profitable, and you guys are looking at the multiples in your industries. So for me, as I'm looking at how efficient these companies are, and then looking at Jennifer's questions, like how do you manage cash flow? It's like efficiency. I mean, do you know those numbers? Do you know what's working? Do you know how to manage those expenses? Because if your top line, is growing, but your bottom line is also exponentially growing, you're not keeping it in-house. So keeping that profitable is really important. And that's why having good advisors like, CFOs, when you get too big, and don't ever think you can't ask questions or look for advice. Always look for advice. Mm-hmm. It's still your decision.
And I think at this point, I really want to bring in George here, because a lot of people don't understand fractional CFO. Could you explain what a fractional CFO? Because a lot of people don't understand that concept.
Yeah. So, CFOs are expensive. And so what a fractional CFO does, and I should say, we do everything. We do fractional accounting and finance, which is everything from staff all the way up to CFO. But a CFO has a lot of experience that they have garnered over their career, but but most businesses can't afford a CFO at $200,000 to $300,000 or more $1,000 a year. So what we do is we let you rent a portion of our time and get the expertise that we've developed over a career that will help you as a small business make some better decisions. Kind of to Alex mentioned Jennifer's question about cash flow. Well, we can come in and we can quickly help you develop a 13-week cash flow forecast that is then refreshed every week and helps you manage your cash flow better. there's a myriad of other services that we can provide, but the fractional, and there's fractional CFOs, there's fractional IT, there's fractional HR. It helps small businesses get the benefit of those professionals without buying the whole person.
One thing to get the best out of a fractional CFO are CFOs that have good quality books. We see a lot of people with QuickBooks that don't know how to set up a chart of accounts, and they come up with negative numbers on their financials. It shouldn't be negative numbers. And it's like you have to go all the way back to the beginning and start charting those accounts. So it's real important to have a bookkeeper who really knows if you're going to use QuickBooks, it knows QuickBooks and how to use QuickBooks.
Yeah,
I love when I see line items as my accountant and it's 6-figure. as my
Yeah.
I would jump in and say there's a difference with having a CFO versus a bookkeeper. You can
Yes.
have, every business does have a bookkeeper, but it doesn't mean you have the expertise of a CFO.
That's right.
You know, and
So
that's
that's a huge,
a great point. And we talk to, hundreds of companies. I do in my market and across our company, thousands of companies a year. And oftentimes they come to us and say, we're looking for a fractional CFO, and we do a deep dive into their books and we go, you really don't need a fractional CFO yet, because a CFO is strategic in nature. And I like to say they're looking through the windshield of the car and looking at what's coming ahead. A good controller or accounting manager is making sure that your financial statements are in good shape. There's no negative balances in asset accounts, or you don't have, I'm not going to get technical on that, but you've got your accounting set up properly. So a good controller is going to make sure that everything is clean, looking in the rearview mirror and what happened behind you. So
Yeah.
it's really important
a
first to
great
get
analogy.
the controller and get your books in good shape before you can really do strategic planning, because if you've got, it's the garbage in, garbage out thing, right?
Yeah.
Mhm. And I think that lends to the concept of what this workshop is about, being strategic. In other words, working on your business rather than in your business. And knowing that you don't have to have every expertise in-house. Being able to align with a team like what we have today, so that you can step back and see where the gaps are, have some benchmark and work on it. Growing your business through financing
Mhm.
or getting strategic value of the business. So I just want to mention that, because sometimes we get in the weeds as business owners, because I'm one, and miss the forest for the tree.
Yeah. And one of the things that you guys mentioned is, in looking at the financials, make sure they're doing things correctly, because I'll see that they'll use lines for equipment. That's not the best use of that line. It's a short-term capital need. It has to be term debt. Using the right products and services is really important as you're looking at what's efficient in that business, because constantly we'll adjust that. It's like, this is, or they'll ask, I need a line. I said, what's the purpose? Well, I need it for this. That doesn't match. It needs to match.
So important to match your short-term
Yes.
with your short-term assets with your short-term
Yeah.
liabilities, right? And use long-term financing
Yeah.
for your long-term. And I see, you cannot use your credit card to buy a car.
No.
Right?
Unless you're going to write the check the next month.
Right, yeah. I mean, it really needs to match up. And how many times have you seen
Yeah.
that?
Don't buy a building on a 1-year note
Right, or a
Yeah.
5-year note.
or a 5-year note.
Yeah.
Yeah.
It's so important to match the short-term with the short-term asset with the short-term liabilities. I don't know how many times I've seen that as well. Yeah, and negative cash flow, not a good thing. You should never have it. When you're talking about negative assets, it's like,
Yeah.
I,
We could come out and grab it all.
when I've looked at that at a financial statement, I'm seeing you have a negative cash flow, and I'm thinking, what bank is going to allow you to have a negative cash flow in your, would you not allow that happen?
No.
You're not just going to
The-
float them $100,000.
No, because we're looking at the EBITDA number, that earnings before interest, taxes, depreciation, and amortization. We're looking for that number. That's the profitability of that company. Is it profitable? Can it service its current debt? Can it service its new debt on top of that? If not, if it's
Mhm.
below that, if it's less than 1-to-1, then you're barely paying your bills.
That's right.
And it needs to be stronger.
Yeah, that's so.
And if you have a capital intensive business, you've got to be able to fund your
Yeah.
CapEx out of that EBITDA number too. So we often look at free cash flow, which is that EBITDA, really less CapEx. That gives you an idea
Yeah.
about how you're going to be able to service your debt.
One of the questions they had on there is, do you need a controller and a bookkeeper? That's more your.
Each business is different, right? I think sometimes having a good controller that's ready to get their fingernails dirty and is economical for the business can be the right person to have on staff. What we often see with small to medium-sized businesses is it's important to get a really good bookkeeper, and then you can bring in somebody like now CFO or other fractional resources to come in and oversee that bookkeeper, make sure that do the first pass review before the owner looks at the financial statements and make sure that there's no errors. But then determining where you are in your business, whether you need a fractional controller or a fractional CFO. It's just something that varies by business.
And I'd like to bring up too, checks and balances. When you're working with money, a lot of times we don't have those checks and balances in place on our accounting. And I've seen where a small business owner will just let somebody else take care of their accounts and they don't look at it. They don't understand what's going on. So it's really important that you understand that. You don't have to do the work, but you need to understand it. Because I've seen cases where like we have one person that's doing accounts receivable and accounts payable. There's no check and balance there, right? And so you can have other issues that you're setting it up for good people making bad mistakes.
Mm-hmm.
So you really, checks and balances are so important when it comes to finance. And I'm sure you cover that.
But it's really, so you're talking also about segregation of duties and
Mhm.
not putting people in a position where they can steal from the company. A lot of small businesses can't afford the staff that you need to properly segregate those duties. So it's important to have an oversight, someone who knows what to look for and is making sure that all the accounts and on the balance sheet, et cetera, are reconciled and make sense.
And do you see that at the banks as well?
I do. And, we're talking about back to the health of the financials, because people are surprised when we get into larger debts or larger exposures that we have to ask compile, we have to ask for review, we have to ask for audited. And they're like, what? That's going to cost me more. It's like, yes, but that's why it's important to have those processes in place ahead of time, because now that's more exposure for us. So we want to make sure that everything is, the business numbers are being looked at thoroughly, and it's all part of the exposure. So we put those things in place, those covenants in place for that.
Yes. Are we missing any other questions at this point? Look over here, just make sure we're not missing anybody's questions.
I have a couple of questions in the chat.
Set out an example of a dashboard or a set of KPIs. Yes, you will get that from Anne. We're going to be sending that out. And the value builder assessment link. Yes, we will be sharing all of that at the very end. Let's see, what are the characteristics of a really good bookkeeper? If I go to a firm that's clearly not enough, could you provide top 5 tips to retain a good bookkeeper? That's a great question. What are the top 5 things you got to look for a bookkeeper?
So I think that, there's a lot of firms that may focus on a particular industry. So you find a bookkeeper that knows your industry really well. So if you're in construction, make sure that you find a bookkeeper that knows about managing the projects, percentage of completion, et cetera. If you're a SaaS company, see if you can find a bookkeeper that knows about MRR and ARR and can set up those schedules to make sure that you're tracking those properly. Oftentimes a bookkeeper in many cases, is just going to set up your QuickBooks. They're going to link it to your bank account. They're going to link it to your credit card, and they're going to and they're going to code those transactions according to what you and they have discussed those transactions are for. They're typically not going to provide some of the higher level direction that we've talked about from a controller standpoint. That's going to make sure that the cash transactions aren't just recorded, but that there's certain nuance around whether there's going to be long-term benefit of an expense that you need to take into account, et cetera. So they're probably, some may be able to do cash flow forecasting, but a lot of them may not be able to do cash flow forecasting. So I think it's just interviewing them. I will say that question, what are the top 5 questions to ask of a bookkeeper, to look for in a bookkeeper? It's a great Chat GPT question. You'll get some good answers from there. So
Coding is probably the most
That's what
important. Is
I'm
that they
thinking.
allocating it correctly, because you don't want to misallocate expenses.
That's right.
yeah,
I think it's important for the business owner to be working with the bookkeeper on setting up those codes.
Yeah.
So you make sure you get those codes right, because you don't get those codes right, you get garbage in, garbage out.
well, setting up your chart of accounts properly
Yeah.
is, kind of the key, and setting up your chart of accounts so that it matches with what your industry is, right? Because you can go and find a chart of accounts, and QuickBooks comes with a standard chart of accounts, but you want to customize it to your industry. And so getting somebody who knows your industry and can get that set up on the front end will save you a ton of headaches on the back end.
Right, so you brought up QuickBooks. Is QuickBooks sort of like industry standard for?
Kind of
Any-
ubiquitous for
Yeah.
small business,
Yeah.
right?
Yeah.
It's inexpensive. It's pretty easy to use. A lot of bookkeeping services know QuickBooks really well. And so it's not the only one, but it's your options in terms of bookkeepers and professionals, et cetera, are greater when you're using QuickBooks.
That's what we're not selling QuickBooks.
Yeah,
That's what we
yeah.
see more than anything else.
Yeah.
Do you see that at the banks as well?
Yeah, a lot of QuickBooks. We have a variety of different ones, but that's the most common.
Right, and it goes into enterprise version when there is beyond a certain level. But what I wanted to make a comment here is most business owners get into business not to do bookkeeping. There are all these administrative functions, and we're talking about the business wealth, health, but there's a disconnect, because sometimes as business owners, we think if we do a lot of activities and drive value, that the business will be okay. But if the business is 80% of your net worth, you need to make sure that it's healthy. And the way to have it healthy is to dedicate a certain amount of time on making sure the key metrics are being tended to, and bookkeeping being one of them. It's almost like, going to the dentist and flossing. If you want good teeth, you want to do that. So for business owners, I'm with you right there. I didn't go into business to do my bookkeeping, but as I work with more of my clients, I realize the reason why it's so overwhelming for them is because they don't have one picture that allows them to pull it together. So knowing what those metrics are, looking at it on a regular basis, and then getting the outsource, not having to hire a key employee, but having outsource of the team that help me have that picture on a regular basis will allow the business health to continue. So I just want to mention that, because otherwise it's too much in the weeds for a lot of us.
And to go build on what you're saying, regular, like every quarter or every month, look at your financials, because you'll be able to see problems before they become crises.
Right,
If you keep an
exactly.
eye on it.
We work as wealth planners, we work with business owners where the business is a big portion of that. So there's a monthly summary of review, which you should do anyway, of how you do the last month. And then there's a quarterly process that you review where your position are, and then obviously a year end. The work is in reviewing it. You don't have to put together the reports. You want to
That's right.
put in place resources that allow you to have the reports, but you need to be looking at the reports. And you know those numbers so that when it's time to go for financing, it's not like scrambling around trying to get it together. So it's investing in having the dedication to do that. And then every so often pull in an expert to have a review, a second opinion of what you're doing. And that's what we do for our clients, not just in the business, but how does it pertain to the whole, their personal wealth? Because, you know, if they cannot get financing, guess who's the bank?
They are.
The business owner is.
Yeah.
And so if you don't do a good job, it's basically eroding your own personal health and wealth.
I think too, knowing the score is
Right.
what we're talking about,
Yes.
right? So, and how frequently you need to know the score depends on the business. There are some businesses that, and many I'm sure on this call, know metrics from the day before. And because that's important for them to manage day to day. Some are looking at it on a weekly basis.
Right.
I think a best practice is to have a flash report on a weekly basis that kind of tells you where you are intra-month on your financial performance for the month. Because if you're waiting till the end of the month to make some changes, it may be too late. You know,
Right.
Yeah.
that stuff has already happened.
Well, isn't that why you have these key metrics that you should
Right.
be looking
Yeah.
at
Right.
on a daily basis, and some
Yes.
metrics that should be monthly or quarterly?
Mhm.
And, but you have those things that you're looking at. I know that when I had a restaurant, I was looking at metrics every day
Every
of my
day,
restaurant.
Right.
Yeah.
Mhm.
And it depends on how difficult is it to get that data
Right.
to review. So
Mhm.
you don't want to spend too much time pulling data that you don't have time to act on it, right?
Right.
But put in place the processes that enable you to get the most important data as quickly as you can to
Mhm.
be able to manage the business.
And I think that lends to the answer of what are the good characteristics of a bookkeeper. Is one is that they know your business, so you don't have to teach them how to categorize the revenue or the expenses. So you don't have to do that every month over and over again. The second thing is the turnaround. How timely are those reports? Because if you don't have timely information, you cannot act on
That's
it.
right. Yeah. That's right.
I know some of the owners are probably thinking about how does a business, gain value? How do they improve that? And a lot of that is all tied to the day-to-day operations that we talked about here, but also, like you mentioned earlier, Bill, is the owner. Is he involved or he or she involved with everything, or his hands on everything? And you have to delegate some of that in order to make it more efficient.
Right. And I'm sorry, you just talked right into what the key metrics that we were talking about, the 8 key metrics. Knowing where the weakness is, whether it's concentrated on the owners
Mhm.
doing all the work or not, but what is the solution for that? And it doesn't mean that you have to hire another employee, but do you have processes documented? Do you delegate them enough so that you're using the lowest paid employee for the simpler task or matching? So those are some of the things that the key metrics help you with.
Mhm.
And again, back to the business health. You have to know, you have to have good data. You got to keep it on a regular basis and then really proactively review it to know where are the areas that you can improve upon. And then prevail on, organizations like what we have here to get resources to improve.
Well, I hate to cut this off, but we've come to our time. It's now, our hour is up. I want to thank everybody for being here with us today. And as I mentioned before, I will send out everyone's contact information. So if you want to have any follow-up questions with anyone individually, please do that. And we'll be doing this panel discussion the second Friday of every month. We, for some reason, need to do it on the third Friday because we want to celebrate Bill's birthday. So we will hopefully see you next month. And our next month's topic is going to be on leadership. So thank you everyone for being here. Really appreciate it.
Bye-bye.
Thanks, guys.
Bye.